In the earlier look, when you asked, do you think the bond market is going to discount the inflation cycle, could you explain what you mean by that?
Yeah, the bond market discounts the inflation cycle. So it's a pretty straightforward statement, and it reflects reality. So if you look at, guys, can you pull up the slide 12? I'll just draw this just to make it crystal clear. So this is what we're saying. This is year-over-year inflation, peaking in Q3 of 18, okay? This, by the way, which should be green, is effectively inflation going to its cycle high, okay? Right here. That's the cycle high. The bond market says, if I can see this in the forward outlook, which is going from this level of inflation to this level of inflation and falling, bond yields fall. That's why the #1 predictor of getting the bond market right is getting inflation right on a longer term inflation expectations basis. This is, of course, just within the construct of a sine curve. If you go back, all the way back to in here, when the deflation fears were bottoming, this is when bond yields bottomed, okay? So again, it's just a very, it's not a simple relationship to forecast. It's a simple relationship to understand that if you had the proper forecast, you would make a lot of money on, and certainly save a lot of money on, and getting away from things like being short bonds. I mean, imagine this week, Ben. You're like Captain Hedge Fund guy. You're like, I haven't made money in like a decade, but this year I'm going to kill it, because this year is the one year where bond yields are going to break out, okay? Because let me tell you a story. Inflation is way hotter, Ben, than you think. Way hotter. It's going to get hot, super hugely hot. And you know what else, Ben? There's a lot of treasuries that are going to be issued. More treasuries than ever before. So those two reasons are why you should pay me 2 and 20, 2% to manage your money, 20% of whatever I make, which for 10 years hasn't been a lot. Haven't made a lot. But this year I'm going to get it right. And this is the 1 week where it's all going to come to a head. It's going to be in August when nobody's paying attention, Ben. There's going to be $240 billion in treasuries issued this week, which, by the way, they were issued this week. And then what happened? Shit, Ben, it all didn't work. I don't know. It's Trump. It's Turkey. Tariffs. That's what made me wrong. Keep your money with me, Ben, because it's eventually going to happen. I'm going to tell you right now, it's going to happen, okay? So, of course, I'm pretending to be an underperforming hedge fund manager, but this week we had, again, $239 billion in treasuries issued, okay? One of the biggest days in the history of bond issuance was in the last 48 hours. And bond yields are going to be down this week. We've had both, 80-month highs with 75-month highs in inflation reports. And bond yields are going to be down this week. At the same time, Brazilian bond yields are up this week. Italian bond yields are up this week. There's a divergence from that. So again, I would have wished that the pitch would have been better. What if the local hedge fund manager said, hey, look, Ben, I know that all this bad stuff's going to happen to the bond market, but I'm really not going to put that on straight up. I'm going to short Brazilian bonds because that's a surer one, because I'm really bearish on emerging markets now. You didn't hear it from anybody. I mean, we didn't hear it. I would give you more than 2 and 20 if you actually made these calls. You know, somebody's got to start getting this stuff right. I know you are, and I know that there are some hedge fund managers who are absolutely nutting it out there right now, so awesome. But again, you can beat a lot of hedge fund managers if you're not one in your PA. You can do a lot better than they've been doing, because again, they're just chasing yesterday's news in many cases, and it's a great opportunity for you to take advantage of the herd.